about today's interest rate cut and the wider implications. I'm joined now by business entrepreneur James Caan, Gillian, Tett, assistant editor at the Financial Times, and Sushil Wadhwani, who runs an investment company and is a former member of the Bank of England's Monetary Policy Committee. First of all, James Caan, you're in big business dealings. How is the interest rate cut going to go down for you?
I think one of the biggest challenges I think businesses are facing is whilst the government are consistently cutting, but it's not getting through to business because the cost of borrowing for business hasn't really changed. In fact, for me, what I'm finding is the banks are actually increasing their margins. So where I was borrowing at 150 basis points, I'm now having to borrow nearly 300 to 500 basis points above the cost of the bank's lending. So in effect, the cost of borrowing to me hasn't really changed. So the difference to business is A, the rates haven't really moved, but more importantly, the banks aren't lending anyway. So at the point, if you can get the money, you're having to pay a substantial premium. So what impact or effect has the bank's policy to reduce rates? It's having no effect.
So is it fair to blame the banks?
Well, it's certainly a very nasty situation at the moment. On one level, it's not fair to blame the banks at all because the banks are frankly trying to repair their own balance sheets and make themselves healthy again, and to make sure they don't and make sure they don't make new bad loans that are going to store up more problems for the future.
But the whole point wasn't it, the government gave them money or is offering them money, but it's at 12% in order for them to interbank loan and to loan to businesses and individuals.
That's one of the problems. And as James said, right now, the channel through which money normally passes around the economy, the pipes of the system are clogged up or broken. So you either need to put so much water through the system it still gets through, or try and declog the pipes, or actually create new pipes to get the money through to the economy.
So Gillian, I just need a drop. I don't need a glass. I'm so happy with the drop.
But you're not going to get a drop, are you?
I'm getting nothing.
And this interest rate is going to take, what, 12... I mean, they all take 12 months anyway to percolate through.
But I think, you know, the other issue is, I think the government's position is that we want to stimulate consumers to spend, but right now most consumers are worried about keeping their jobs, keeping their household bills together. There isn't the money to spend.
And it's unrealistic to expect them to spend.
No.
So how do you get the banks moving? How do you, as it were, unclog the pipes?
I think there's several things that they can do, but a starting point to essentially get a proper comprehensive plan, I think, is for the Bank of England to move more quickly, get rates to zero or close enough to zero, just as we've seen in the US in December, and then start with quantitative easing.
Right, but on the quantitative easing, before we come on to that point, I mean, what James seems to be saying is it doesn't matter if you get the rates to zero. The problem is the rate that he's dealing in is not zero.
Oh, that's absolutely right. Now, the benefits of getting to zero are not just the rate itself, but that it provides a framework whereby the government and the bank can then sit down and do a bunch of things to essentially help unclog the system.
To me, it's just an illusion.
Why don't I give you, James, why don't I give you some specific examples of what they can do? Once you get rates to zero and you're engaging in quantitative easing, the government can actually step in with the central bank and do what they've done in the US, which is buy commercial bills. So they're providing finance to corporates directly. They can step in and provide trade finance. They can step in and buy mortgage-backed securities and get the mortgage market going.
But just let's be quite clear, in very simple terms here, is it right? Are you actually saying the government has to print money? You know, as Paul Mason says, open the account, put fictitious money in there, and then put fictitious money out in the market?
Well, nothing else has worked so far, Kirsty. It seems to me that we're getting to the point where the longer we delay things, the much greater the risk to the economy. The longer we delay it, the more likely that businesses that are otherwise healthy go bankrupt.
But you were in Japan, you saw this idea of quantitative easing, printing money during Japan's deflationary years. Did it work?
Well, I was in Japan in the late 1990s, and back then I used to have to call up my news editors in London and say there's this weird thing quantitative easing happening. And it was like being in a science fiction experiment. We could have been in Pluto. No one knew what it was. And it's extraordinary. Here we are again now. The short answer is that I think most people in Japan now feel that it was a necessary part of the recovery, but it wasn't sufficient.
So it helped, a psychological boost.
It helped with the margins. And really, at the moment, what we're dealing with is not so much a battle of maths, but a battle of psychology.
But what makes it so different from what Robert Mugabe is doing in Zimbabwe?
Oh, chalk and cheese. But if I can first start by dealing with the differences with Japan. In Japan, they did this too late. The psychological damage had already been done. They waited too long to get rates to zero. They started quant easing very late in the day. We need to start early and preemptively. More importantly, we need to do it differently. What the BOJ did was it created this excess money and thought that somehow it would percolate.
But it does sound desperate, doesn't it, James Caan?
What I'm saying is, which economy in the West has actually printed money at this rate and actually proved that strategy to work?
It's beginning to work in the US. They started in December, and they've managed to get the LIBOR OIS spread to come in. They've managed to get credit spreads to come in. They've managed to get mortgage-backed security spreads to come in.
But
it's
is money
beginning
getting
to
to
work.
business? But is business actually in America? Because businesses are still not able to borrow. There's still no liquidity in the market. Jobs are still going down. Businesses are failing. So I don't understand which planet are we describing.
James is illustrating one of the big problems with this, is that it's very disorientating for consumers and companies. I mean, it's another sign that the world that they thought they understood is collapsing around them, and they're left without a compass, trying to work out what on earth is happening.
And the problem is that when you talk to Alistair Darling and you talk about, printing money, quantitative easing, whatever you actually want to call it, he says, well, we're not there yet. And the worrying thing is that people think, well, if they get there and it doesn't work, then actually what happens? I mean, is everything, do you think, dependent on, like, Barack Obama talked about his big economic measures today, fiscal stimulus, 3 million jobs, infrastructure, huge infrastructure spending. Are we looking to America, do you think, for further inspiration?
I mean, I do recognise that they have to do something, but I do strongly believe that in the past, we made rash decisions too quickly, we panicked and we got into this mess. It just feels like we're doing more of the same. I think, to me, there's a very simple solution. I think not the Bank of England, but the government needs to step in and legislate that interest rates, whilst they're being cut, that needs to get through to business and to the consumer.
Is it the question of full-scale nationalisation of the banks?
No, but I think there should be some intervention. The government has enough leverage now. They've put enough money in there. They should be able to legislate to say that you should be able to pass that saving on to business and to the consumer.
But if the banks are building up their pot and being responsible, if 1.5% is not going to encourage savers to invest and put their money into banks, how are they going to have the money to loan?
But remember, right now,
that's precisely why we need to print it. And if we print it, we essentially unclog the mechanism, because what this allows us to do is put more capital into banks. It allows us to buy the toxic securities that are on bank balance sheets that's stopping them from lending. And the question I want to put to both James and Gillian is, what is the alternative?
Okay.
Because if we wait and do nothing, we've got the Great Depression coming.
OK, Gillian.
What I would say is right now the government's in a very difficult situation. If they shoot off their bullets too fast, they'll be left with no ammunition and people will panic more. But if they need to shoot off enough to create an impact. And so I think they need to take a deep breath and try to shoot them off in a steady fashion.
But do you think that in the end, printing money will be the answer?
I think that's certainly where they're heading, yes.
Thank you all very much indeed. Well, whether it's the answer or not, I'm sure we all disagree. In Gaza today, the Red Cross is